Alright, good evening everyone. For me at least, wherever you may be. This is going to be my weekly outlook coming into the you could say first official trading week of the 2026 fiscal year. This video is going to be setting the precedent for the tone that I want to establish coming into the new year. Going to be going over my own weekly outlooks every single Sunday, just so I can, not for exposure or popularity, but more so being able to talk my thoughts out, and then at the end of the week being able to review them and seeing if or if not I adhered to what I was saying and how different things transpired throughout the week. So I'm not going to get into global macro. A lot of the people who watch me or who talk to me on a daily basis know that I am really involved in global macro and all these things, and obviously, we have all the big stuff going on in the commodities market. Oil and gold is going to be a very big thing coming into the week and first month of Q1, but it's not something I'm going to be going over here. If you want to hear my thoughts, you just message me on Discord to get in contact to me, and we can talk about that further, but we're just going to be talking about S&P. So first, before we even get into any levels, we can talk about more so how the index is performing. Oh shoot. So on a monthly standpoint, you can see we've been one time framing up most of the year, typical bull market behavior. And now we reached a Q4 stagnation. It's kind of just a balancing market. On the RSI, we're above 70s in the threshold where we could be selling off, but it's more so just a balancing act. We're building volume at all-time high areas, which is a good thing, we're just pretty strong. And the last time we had a correction was in March in the tariff announcements, so likelihood of getting another big dip all the way down to here is very unlikely. If we were to get one of those this year, it might be to like 6300s, more so, yeah, 6300s, the dip buy, or even 6500s, depending on how low the RSI ticks. But on the monthly, we're already above the threshold, but that doesn't mean it's an automatic sell. It's just looking how we are overall. Same thing on the weekly. You can see that we have been holding above the 50 pivot level since April, which is very good, and we're just staying here, stabilizing up here, so nothing pretty interesting. But what's different on the daily is that in the Christmas week, holiday week, we ended up rallying on low volume, coming up to almost new all-time highs, making excess high in the one time framing up, and then liquidating all the long side volume from the previous week and last week. You can see this was a dip buy on the RSI down below the 50 pivot level, where it then made a new high on the actual indice, and now we're coming back to that pivot. Kind of want to be seeing if we're going to get another dip buy here at the bottom of this high time frame area at 70s. You could say around 70s. We'll go into that when we get my Sierra charts, but is this going to be another dip buy, or rally's going to, which is my personal opinion, our rally's going to start being sold off? Yeah, I'm not going to go into much detail on why I think we're going to start selling rallies, but yeah, it's just like too much to go into. I don't want the video to be too long, but yeah, that's how we are on a daily. So weekly and monthly, we're overbought and we're balancing because of that, which is a good thing. But on the daily, we got this dip buy on the 17th. Is it making new value lower, higher? Not really. It was coming up on thin volume and making excess highs into the already tapering volume, the overarching profile. So it's kind of a few things to take into account. Like, are we going to continuously be dip buying? Are these buyers going to continue showing up? I don't know. But I set my pivots and then react to what I see. So this was the previous week profile. I can come to a weekly. Previous week profile is one time firming up. You can see very toothy structure. And the way I traded this last week, as you can see, we tapered into this short-term balance here, build value here, and then just sold back off. The way I was going to trade it was more so looking to fill in this toothy structure, which we ended up doing into Tuesday. But if you guys follow me on Twitter, I ended up saying I was going to swing long down to, I think my final target was 94 and 77s, I believe, which caught low of the week. But main idea was we repaired the toothy structure, but we're still hitting lower. We were liquidating all this volume, and it was in the overarching balance, so you kind of filled in the little shelf right here and then sold off to get that full traversal, which we like to see. And now coming to the overnight session, well, we've had a previous week one time framing down, so you can see this one line I have here at 6904 is going to be a short-term pivot coming into Monday or rest of overnight that I won't be watching. Is if sellers want to continue the aggressive one time frame down structure. You can see already in the overnight we had an 11-point move gap up, and it's kind of just chopping up here. You're not getting that immediate excess sell-off that I would have wanted to see it. So acceptance above 04s, I'm looking to cover back to short-term resistance at 36s or even 39s. More so 41 is the best level. So looking to be rotational within here to fill the poor structure within this overarching balance. So you can see this is the middle of the high time frame HVN, so looking to fill this back in instead of this just big toothiness, which is an anomaly. True resistance is we're going to have short-term resistance up into 41s. I don't mind being short or long here, light size to see if we get a reaction or a pop. But most importantly, resistance is going to be into 64s, top of the overarching balance in the shelf there, aligning with the previous week poor highs right here, and this shelf, and then this previous all-time poor high, or not all-time poor high, but that 2-week balance we had with the poor high that got cleared out. So I think that could be a good resistance area coming to the week. We already went over 6904s. If we lose overnight low and begin to resist at 6904s, looking to sell short down into the bottom of this balance at 80s, but you do have this like complete volume drop off. So 75s, I don't know what price level that is, but 75s, and actually let me see what price level it is actually. I can draw the level now. 72s is going to, and previous week low is going to be my pivot, and that's going to be telling me or indicating to me, okay, are we going to continue the one timing framing down structure? And if so, we would be accepting this distribution here. And at that point, do I think 59s is really going to catch a bid if we continue to sell off past these lows? Not really, especially what I was showing on TradingView with the RSI thing. I would more so want to be positioning short against these two levels to get us down to 22s and 12s. And then we can see a bid around there. But to say that we're going to get the huge dip buy into 59s and it's going to come all the way back up to 41s like a 90-point bid is just kind of delusional to me. Especially if they're not even able to get up to here and they kind of just sell below 04s. So a few things to take into account, and this is kind of like a double distribution here. That's why I have that 59 level here. So it would, the previous week low on the 59 would be my weekly pivot. That's the way I'm going to also be uploading my daily plans into my Notion, and I'll be sharing those on Twitter. So if you're not following me on Twitter, go ahead and do that so you can get access to those. I'll be doing like the line in the sand and line in the sand level, target levels, pivot levels, all those types of things, and how I do my outlooks and how I would approach the day. I want to be sharing my trade journal, but I'll upload executions. That's like my moat coming into 26, being a little bit more transparent, showing my process, and just looking to connect with all traders on a more broad level, expand my network. So I think that's going to be the weekly line to stand, the edge of this double distribution and previous week low, especially if they're holding below 6904. I'm sorry for reiterating myself so much, but it's kind of just to instill it in my head. Weekly line in the sand here. Below here, first targets is 22 into this shelf on the TPO of this profile. Then you have the downside ledge here. You have another profile here. Below 12s, target 79s. 12s is the line in the sand before you hit 79. So let's say you're catching a bid off 22s, you catch a bid off 12s, but then you start forming poor lows, or you start balancing right here. Look for a crack, get short around 22s or 12s or whatever MGI we start getting, get short down into 79s, nothing less. It's going to be 79 to 76. It's also on this high time frame profile shelf, and then the shelf on this TPO profile. So it's more so a triple distribution here. That's how I look at it. And do I think we have the volatility to get down all the way down to here? Not really. So, I mean, if it does get below this distribution here, and like we begin to chop this area, fail to bid here, crack, get lower, I'll be uploading my Twitter, probably the rest of how I'd position myself for the rest of the week. But I don't know. Maybe we might get it with the expansive volatility in the commodity market that might be showing up. Who knows? Who knows? It's going to be interesting to see how the market's going to move this year. Do I think tech, it's the biggest driver? The big strong names, you have Nvidia that is trying to bid again. It's just all these big names are kind of just ranging at their highs. Apple's on a crazy run, but all these names are kind of just consolidating at higher prices. You can see Tesla was selling these prior all-time highs off, and now it's balancing up here. It's going to be interesting to see if money is going to start moving into other things like AI, energy is a big one, and then commodity markets like copper, gold, for those data centers that are going to be those are like expensive or materials that are needed to build those, that capital and the machinery, the PP&E, as you want to say, to use the buzzword. But yeah, it's hard. Tech is going to be big going to here. Is it going to show weakness? Because that's like one of the biggest drivers in the S&P right now. It's what's holding most of the weight. Yeah, I don't really want to go into other shit. Bitcoin. Yeah, we don't need to go into it. But yeah, tech weakness, commodity strength is going to be interesting. And yeah, how we're reacting. Also, I think that, where's NQ? NQ wise, we can do a little bit of NQ. You can see that that bid we call on the 16th actually didn't make new highs, so indices are not super correlated right now. They're kind of just ranging, and Friday closed within this distribution. I was thinking below 460s is going to get us back down to, well, that's like a 600 point, 700 point move down into the December lows. I think it's more likely we see the December lows rather than previous December or previous month high. Especially now, since it's like every high is below the pivot line. So can rallies continue being sold below 672? Reclaim 672, we can finally clear out these poor highs, I think. Yeah, I think that's ES, that's NQ. Is there much else for me to go over? If you're wondering how I drew the distributions or how I see it, I trade auction market theory framework. So the way I see it is this is one distribution. Then you have the anomaly here on the short-term swing profile. As you can see, it's from the 18th swing low into here. This is one distribution. I had that resistance market out the shelf, but the more probable scenario is if we do accept above 04s and we start rotating, it's going to chop this level out and then chop this structure out and then find its resistance, and we can come clear. That's the way I think it would go, just to continue building out this HVN. And then you have these two short-term balances. That's why I say above 64s is also weekly pivot to the upside. Above 64s, we target 85s. Resistive at 85 sells down into 64s. Are we going to continue building value here, or are we going to knife lower in an instant rejection and continue forming the axis that we've seen 1, 2, 3, 4 times without building any actual structure besides this last time we did it that actually made the full all-time high back in October? I want to see something similar to that if we were going to be holding above 64s, above 80s. And then we can start getting into 7004 shelf. So I've gone over upside targets, downside targets, pivots, RSI, all these multitude of things, an array of things. You'll be seeing in my Notion as well when I publish it tomorrow for the daily plan. But yeah, any questions, feel free to hit me up on Twitter. Have that typed in the description. And yeah, thank you. Safe trading this week.